candlesticks gives more visual interpretation of what is happening, what is the psychology behind that particular price action, and that is why it makes it very interesting for a reader. जो भी market participant है उनके लिए काफी फायदा होता है to get this perspective. Now, when you try to understand the candlestick pattern, okay, when you try to understand the candlestick pattern, you have seen that there is a red body candle, there is a green body candle, and they are basically connecting the open, high, low, close. And they are ensuring that you are getting very good idea about what is happening. Now, close. Okay, when you're talking about the open, high, low, close, you have to understand that every time you may not have a long body, every time you may not have a small body. So it will keep on varying. So whenever you take a look at a chart, there will be various kinds of candlestick at work. Now, when there are various kinds of candlestick at work, you also have to see at that point, what is the kind of trend which is there. Because if you're going to see any chart, the trend of a particular chart is very important. The trend of a particular chart. Now, there will be stocks which are not in any trend. In those kind of trades, there is no way to look at it. So we will take a look at that concept. So now when you're talking about candlestick charting, so I told you about a plus sign where the body is very, very thin. That is called as a doji. So doji will come anywhere along the chart, and doji basically represents uncertainty. Now, what do you mean by uncertainty? Uncertainty means that neither the bullish side nor the bearish side is having any view. They are not able to decide whether they should stay on the bullish side or on the bearish side. So that is when the doji gets formed. Now, a doji, when it gets formed in an uptrend, that means that there is uncertainty on the way up. Now, if a doji gets formed on the way down, there is uncertainty that the prices will continue lower. That's how the uncertainty is handled. Now, let's take a look at some examples. You can see here that in this scenario, prices were going up. There is a doji here, and then the prices, they don't sustain much, and then they come down. Correct? You can see here, prices came down again. They try to revive. Again, there is a doji, and then it comes down. Now, prices are going up. Then you can see here, there are regular dojis which are emerging. And then when the doji emerges, it is an indication that you have to be careful. It's basically like an alert mechanism. It is an alert mechanism for a trader. So whenever there is a doji, you have to be on alert, because many times what happens is we always get excited while we are trading, right? I'm sure that all of us are very excited. We have taken a position. We know that yes, this stock is going to go. But then there are certain things which you tend to overlook. And that is where these simple concepts will help you a great deal. Now, when you want to see a scenario where there is going to be some strong possibility of a move up, then you have to look at something called as a hammer. So hammer comes at the end of a fall. Okay, hammer comes at the end of a fall. So whenever the prices are falling, you have to look out for a hammer. And a hammer is looking like the one which is shown here, which is having a small body and shadow at the bottom. So a shadow at the bottom means that there is a demand. There is a demand which is pushing the prices up. It need not be, it is color neutral. It could be red, it can be green. But the location of the hammer is important. The location of the hammer. What do you mean by the location? Has it come at the end of a decline? If it comes at the end of a decline, then it is called as a hammer. You can see here, the prices are coming down, and at the end of a decline, you are seeing this hammer. Now, it can be red, it can be green, not a problem. But then it has come at the end of a decline. Now, you can see here again, prices are declining. So, whenever there is a decline, look out for a bullish candlestick pattern. You can see here, this is a hammer. Now, the same design, but it is on the upside. The same design, but it is placed on the upside. So the same design, if it is placed on the upside, it is called as a hanging man. You can see here that in this, the same design is the same, the rules are the same, the location is different. All right. So now in this scenario, you will see that the prices are going up. When prices are going up, look for hanging band. When prices are coming down, you look for a hammer. So you can see here that again a small body with a tall lower shadow. Ideally, the shadow should be twice the size of the body, which indicates that yes, they are trying to hold on to higher levels, but they are not able to make it through. All right. Now you can see here as it goes up, whenever the price has risen up, you have to check whether there is a development of a hanging man. So you will see here that now we are going to the other side. First, the shadow was below the body. Now the shadow is above the body. When a shadow is above the body, it indicates that there is a supply. What do you mean by supply? Supply means selling pressure. Okay, supply means selling pressure. Now, this selling pressure, if it intensifies, then it creates a small body with a tall upper shadow. When shadow is above the body, it's called as upper shadow. Shadow is below the body, it is called as lower shadow. Now, when you are going to take a look at this, this is pattern is called as shooting star. Right? Many of these names in Japan, they have been named after either the astronomical names or they have been having some war kind of names. Why? Because at that time there was a lot of war going on in Japan, and those cues have been taken to name these patterns. So they want a pattern which they can remember. Now, going forward, if you just say shooting star, this particular stock has formed a shooting star. Immediately you will be able to connect. That is the benefit of these pattern names. All right. Now, this shooting star, you can see here that it is going to come at the end of a rise. So here you can see that the price have risen and what you have is a shooting star. Now, this shooting star, you can see here that every rise you will see, it's not necessary that these patterns will appear. But then at the end of the next few slides, you will see that somewhere or the other, these patterns will appear, giving you an indication that there is a bearish scenario developing or there is a bullish scenario developing. All right. So now, again, the same design, but placed on the downside. Same design, okay, where the body is small and the shadow is top. These are recurring patterns which are visible, and that is the reason why I have taken these. If you go and check out the names of candlestick patterns, there are more than 150 patterns, and you will tend to get a little confused because so many names. We are not here to do a naming ceremony for the patterns. We are here to make money. My agenda is very clear. So I am going to be looking at patterns which occur on a regular basis so that I can start participating and make money, right? Inverted hammer, this is also simple. All right, this is also simple. You have to have a decline, right? You'll have to have a decline, and then you will see at the end of a decline, a small body with a tall upper shadow. Again, a decline, a tall body, a small body with a upper shadow. So this indicates that there is a possibility of movement to the upside. That is inverted hammer. Any questions so far? I'll take a pause here before I move on to the other set of patterns. All right. Let me take a pause here, and I will go on to. I'll take a pause before you post some questions. Let me just give you a 2-minute window. Okay. Is everyone clear till here? If you're clear till here, type CLR on the chat so that I know all of you are clear. All right. I'll be going to the examples. Ajay, I'll be going to the examples, but I want to first. The location of the candlesticks are important. All right. We will open up a chart and we will discuss the patterns. All right. Don't worry about it. Don't worry about it. Okay. So let me go through the patterns. There are some more patterns which are there. Okay. I have kept it. I have kept it easier to understand. Okay, so that there is limited uh, download on you on terms of the pattern, and the ones you will see, I'll open some charts. You will see that they will appear in multiple. These are single candle pattern. Now we will go to two candle pattern. So where the second body. So this is the first body. This is the second body. All right. The second body assumes importance. All right. So the second body assumes importance. So this is called as a engulfing pattern. Okay. This is called as a engulfing pattern. What do you mean by engulfing? Engulfing यानी पूरा cover कर देगा. So you are comparing the body of the candle. Please hear me. You are covering the body of the candle. So the body of candle number 2 is covering the body of candle number 1. So then it is called as a engulfing pattern. Now, if the body of the candle is green, it has to cover the red candle. Green cannot cover green. Okay. Green has to cover a red. What does that mean? It means that it is absorbing the so it is a bullish scenario. It is going to come at the end of a fall. All right. It is going to come at the end of a fall. If prices are coming down, all right, if prices are coming down, it will come at the end of a fall. You will have a bullish engulfing. So you can see here, prices are coming down, and then you will see here that this candle and this candle. So you're checking the body. Please note, just check the body. So if the body of candle number 2 is covering the body of candle number 1, body 2 should be green, body 1 should be red. Then it is bullish engulfing. So you can see here that, and it has to be at the end of a fall. Body 1 is green. Then it is called as a bullish engulfing. Now, reverse is bearish engulfing. Reverse is bearish engulfing. Body number 1 is green. Body number 2 is red. Body number 1 is green. Body number 2 is red. Bullish engulfing, bearish engulfing. All right. So you are only looking at the body. So it indicates that there could be a potential reversal from here. There could be a potential reversal from here. Now you can see here again another bearish example. You can see that body red, the second candle is red and the first candle is green. That means it is bearish. Clear? Everyone clear with this? Yeah, everyone clear with this? I'm waiting for you to type. All right. Great. So now what I'm going to do is, if you're having any questions as we go along, okay, I'm going to bring up a chart here. All right. I'm going to bring up a chart here and we will go through some examples before we move ahead. All right. And I would like you to tell me what kind of patterns are we seeing, etc., so that everyone will be clear with that. All right. So, yes. And whatever your questions are, I would like you to post them on the link. Okay, I shared a link, and please go out there and post your query. Let me bring up the chart. Can everyone see this? Okay. What is this? I'll use the arrow. What is this? Okay. Very good. Right. What is this? Yeah, shooting star. Correct. Shooting star. Absolutely right. Let us see some more. Hold on, please. Let me. Okay. What is this? If anyone is having any confusion, you got to tell me as we speak. Very good. Hammer. If anyone is unclear, you'll have to type in your query on that form. Please save that link. Please save that link. No, there is no bullish engulfing there, Raghav, because it has to cover the body. I will select a bullish engulfing also. Hold on. And what is this? This one? Yes, it's a long body. It is not engulfing. This was a trick question. It is not engulfing. Let me just go here. If you see here, there are two candles. Okay, there are two candles, but this candle is green. Now you can see all that, but then now what is this? Very good. Bearish engulfing. Wicks are not considered because wicks may vary from place to place, but you are checking the participation. That's how the pattern is designed. You are checking the participation, and based on that, you are taking action. Let's put an index. Index has not seen much movement. That is why I have not put an index, but we can go to the intraday chart and see if we are able to get any clue from here. You can go into any time frame. What can you see here? Right here. Great. So is everyone clear with the pattern?